options. Now, having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to create and preserve more wealth. Hey, we're streaming on Expert CRE Secrets podcast as well, and we're so excited for you to join us there. Each episode, we're joined by some of the best real estate, financial, and wealth minds in the world. And today's guest is no exception. In fact, he is managing director at DLP Capital, and he has an extensive experience in wealth, finance, and numbers, and so much more. Please welcome to the show with me, Rich Delgado. Rich, how are we doing?
Brett, doing very well. Thank you. Thank you for having me on the podcast.
Absolutely excited to have you here. For our listeners or anyone who's listening for the first time, would you give them a little bit more about your story and your current focus?
Absolutely. So I've started my career in New York out of Deloitte & Touche. Never did a normal audit, got into a specialized group, reverse engineering securitizations. So it's launched and propelled my career in structured finance, spent the better part of 30 years with mainly two large public companies where, again, I ran all of the capital markets, all of the securitization work, all of the financing work, and the investor relations. So again, when I thought my career was going to need a little bit of a pause and just take some time off to relax, I wound up meeting Don Wenner from DLP Capital, our CEO, and my 6 months that I was planning to take off turned into 6 weeks. So started with DLP about 4.5 years ago, and I helped the company really just raise equity and raise debt. A lot of the same stuff I was doing, slightly different asset class.
Amazing. You know, Rich, I believe you've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. So before we dive into the major topic today, which is kind of building and creating wealth with DLP Capital, I want to take one other step back. You know, maybe the days back in New York when you're younger, Rich, you know, what would you say that one or two gifts that you believe you were given, and how does that help how you help and bless people today?
I would say probably starting with relationships. I grew up in a deli. My dad owns a deli in New York and still there after 55 years. And I worked a lot with folks in terms of interaction. And so I think that really helped me develop a real appreciation for people's needs. And with that, I'm able to really just listen to folks, understand what their needs are, and then figure out a solution from there. I've always been blessed to work with numbers. My dad always started us off with merchandise and doing a cost up and adding on, and then it was working at the cash register, and you couldn't use the cash register to tell the change. You had to calculate it. So again, that's always helped out, and so I've developed an affinity for just mathematics, numbers, economics, and here I am.
And what a better place to learn, but in New York at a deli with your family, with customers every day, numbers, seeing your dad being an entrepreneur, your family, that is fantastic, and be able to connect with people. So let's dive into the topic at hand. So what would you say is the number one secret from the inside now for 4.5 years with DLP Capital that DLP Capital has been able to do to, you know, create and preserve more wealth for families and for investors?
And honestly, it's the easiest thing in the world, Brett. It's do what we say we're going to do. So again, we publish a lot of targeted returns, preferred returns, and we make everything visible to our investors in terms of what our vision is for the year coming up, what our compass is, what direction, what our targets are to hit. So it's really doing the hard work to commit and accomplish those goals. And we do that through different rhythms throughout the year, throughout the quarter, throughout the week. And so that really helps us produce great returns for our investors and consistent returns.
So it sounds like doing what you committed to doing, but not only that, doing the disciplines necessary in order to basically prepare and plan to win. Is that a fair summary?
That's exactly it. And it's preparing to win. That's a big point because, as you know, there are a lot of folks out there who have the desire to win and they have the will to win, but they don't have the will to prepare to win. And that's a big portion of our success is that preparation.
So let's talk about that a little bit more. I think this is a key point. Now I think over 350 employees, right? Not including even maybe additional employees out in the field, right? But talk about how the momentum is sustained quarter after quarter, year after year. what's the secret, or you can start with yourself. How are you doing that? And collectively, how are you seeing DLP as a whole with the leadership and the team members being able to sustain that momentum?
Yeah, I appreciate it. So I'd start with people, right? I mean, if you ever look at our flywheel, it always used to be capital, but we've recently recognized the fact that you cannot sustain this level of growth and achievement without the right people and bringing in the right talent. Doesn't mean just adding number of people, it's adding expertise. Again, from within, developing leaders, which is a big portion of what we do. But then when there's, a different business, or if we're starting something new, again, like we just got into RV camp communities, it's finding the right talent that can help you grow that successfully.
I think that's so key. Talent plus the ability to have them fit well in with everybody as well, keep that momentum moving forward. So what would you say the next secret is to DLP Capital helping people create and preserve more wealth and keep the momentum moving forward?
Yeah, again, I'd probably take a step back and just say, it's really truly from our perspective what we call our 20-mile march. So again, a lot of it is maintaining a pace that's sustainable. So again, the 20-mile march means we're not trying to do too much in one period, one quarter, 1 year. We're just trying to consistently, month over month, do the things we need to do to achieve those bigger goals.
What was the one thing, and perhaps you knew about this 4.5 years ago before you joined DLP, or perhaps you're learning secrets on this because you're experiencing it, you're living it, you're doing it, right? What would you say helped you personally not overexert or go let's say the 40 miles, if you will, in the analogy, right, versus just 20 miles every day? What's the practice that helps you to stay within sync and balance?
Yeah, I'll admit that it took a little adjusting too, because I was always trying to go 200 miles an hour all the time. That's not sustainable. You get burnt out. I learned most of it through DLP and through Don, and again, the building the elite organization rhythms. Particularly, we have one called our rocks, which are the quarterly goals we set. And it's a very simplistic theory, which is simply, if you fill a cup with sand, which are all the little daily minutia that comes into your life, emails, phone calls, everything else, you'll never have room to fill that cup with big rocks, which are the important goals. But if you focus on the big goals first and then pour the little stuff over it, it'll all fit, right? So it's really how you change your rhythm and how you focus on your day. So for me, the biggest success was our elite journal that we use. The elite journal is a 90-day journal. It's daily. It helps you look at your day, get it prepared for the next day, but then also what went well, what didn't go well. So it keeps you on track, making sure that you're always focusing on those important goals.
So well said. And it's so simple, yet it's not easy. It's easy, but it's not necessarily easy to keep the disciplines going. And so having that elite journal, having like an amazing person to work with like Dawn, right, and to keep the momentum moving forward is really remarkable. And I've seen this now with DLP since I've first started to learn about you guys a couple of years ago, and it is remarkable. And it's what makes the difference to keep the momentum going. What other secrets or thoughts would you say is to DLPs keeping the momentum going, as well as unlocking freedoms for families and clients through performance of investments?
Yeah, I will say you used the word discipline several times. It is the discipline. I love the fact that Don does not try to deviate too far out of our lanes, right? We do what we do, and we do it very well. And we focus on doing it even better all the time, improving our processes, improving how we acquire, build, improve workforce affordable housing, right? So we don't go venture out and try to, get into a bunch of hospitality or do a bunch of other different things, because of the fact that we look to return very consistent returns to our investors. We like the market we're in. We do it extremely well, and we stay focused. So it's the discipline of saying no to a lot of things that come up in front of you and being able to stick to the plan.
Excellent. Let's dive into some of those specifics, right? We'll talk about the DLP Buildings Communities Fund, right? And let's just dive into a little bit about what you're liking about the opportunity in the future, what we're seeing now with even maybe just alleviate concerns with cost to build. I know interest rates have also obviously increased drastically in the past year. But talk about how the DLP Buildings Fund's outlook is looking for you and what you like about it.
Well, I'm an investor in the Building Communities Fund, and I love the fund itself. And I think it has great prospects. First and foremost, we can build in today's environment. We can build brand new workforce affordable housing cheaper than we can buy an existing building in different markets, right? So if we can go in there and get a brand new 2023, 2024, 2025 building with brand new units, brand new appliances, brand new construction, and own that at a better basis, right? It's an easy no-brainer. So I like it from that perspective. I also think long-term it's going to produce the highest returns of all of our funds because of the fact that we can acquire it at a better basis. And again, it's a fund that is growing. It has, about 10,000 units that are in some form of development right now. But easily I can see that being 100,000 units in just a few years.
Fantastic. Now dive into that model a bit of, it's like a REIT, right? Where you're investing into shares that goes and builds these assets, right, over a period of time, and a chance to diversify, have multiple assets, right? But also the ability, in case you need to raise your hand, you might need to get out in a year, or at least a portion of that. So talk about the rhythm and the pace of an investor's piece of capital if they're investing in that, and how that might go well for their, I call it maybe once a year liquid, right, is a good way to put about it, right, versus some other asset types that are maybe specific, but are 3 to 5 years or 7 to 10 years, but it's only that one project, and that lack of diversification could put someone at risk.
Yeah, so you hit a lot of the hot buttons and why we love our funds and how they're structured. Interestingly enough, the Building Communities Fund is the only of our 4 offered funds today that is not a REIT, but it is something we're looking at potentially changing, which is just simply a tax election. But our housing fund, our lending fund, and our preferred credit fund are all REITs. The beauty is they're all similarly structured in the sense that you are not investing in any particular asset or property, right? So similar to a syndication where folks invest in one property, that can go really well, but it can also go really poorly. And we've seen a lot of instances where investors lose money because of that one asset. The beauty of our funds is you're investing in a fund with a pool of assets, whether it's a pool of loans in our credit funds, the lending fund and the preferred credit fund, or a pool of properties. So we have communities. Today in the housing fund, we have 62 communities. We now have, probably about 10 communities in the Building Communities Fund that are all in that process of some stage of development. And it's a beautiful thing because you have diversification, you have geographic distribution, all of which are very important from a risk mitigation standpoint. And then to the point of access to liquidity, all of our funds are liquid. Our 2 credit funds have 90-day liquidity. You can get out anytime with 90 days notice. And then our housing fund and our Building Communities Fund offer annual liquidity. So you can get out in whole or in part every year. You could take a little off the table, or you could take your whole investment back out. Very unlike most real estate funds where you are locked out for 3, 5, 7 years.
I absolutely love that the value of every day and every way you get a little better, in the sense that you guys are looking at ways to improve not only the diversifying the risk, lowering the risk, but improving the processes and the outcome for the clients. If they need or want some liquidity, they have some form of liquidity, right? If they want growth and big opportunity, they have that in the buildings fund. Of course, the lending fund has consistently returned over 10%. Knock on wood, continually, right? And it's a great opportunity to get that cash flow coming in right away. On the buildings fund, I know it's paying about an 8%. I also am curious about the overall debt. Someone might say, "Wow, but Rich, isn't it really expensive because debt has increased?" What type of leverage is on some of these assets as it pertains to building? In other words, how much is equity going in, percentage of a building versus the debt? And what's maybe the blended interest rate? Anything concerned there? Or have you been able to fix a lot of that right now so we're not subject to big adjustments?
Yeah, so again, a lot there as well. We'll start with the fact that the Building Communities Fund targets a 13% return and it pays 8% preferred. And that's a big important point because all of our preferred returns are ahead of our management fee, which means we put our money where our mouth is. We don't get paid until you get your preferred return. And that's paid 2% per quarter, which is meaning you're going to get liquidity and cash flow throughout the year, and then all of the excess is paid at the end of the year. Last year, it produced a 13.11% return. And again, that was in a difficult, challenging interest rate and just overall housing market, and we still produce great returns. A lot of it stems from the fact that, again, we are focused on really achieving those numbers, right? The housing fund, another great example, was 12.97% return, targets 10 to 12%. Again, takes a lot of hard work, doing the things you need to do, putting the work and the effort in to improve the properties to create value, right? Value doesn't magically happen. In fact, values went down for most real estate funds last year. We were able to still produce a net positive adjustment.
Excellent. Now on the debt piece for the DLP Buildings Fund, how does that look? Any concerns there? I think that feels like out of the clients that are investing with us, that seems to be the number one thing is it's not the operations problem, it's not the occupancy, it's not even the NOI, it's a debt challenge that most people are facing, right? So how is debt affecting the Buildings Fund, if at all?
So again, we've been very successful at obtaining leverage, getting financing for our projects. We have a few different banks that we work with. We typically will put the equity in for the acquisition and development of the property. Sometimes you're able to get some financing for that piece as well. However, most of the times we'll put the cash and the equity up for that, and then bring in financing for the vertical construction. We have construction lines, which are very, builder-centric, where as you're building units, you're funding the completion of those, you're getting reimbursed for that, so you're able to take and recycle the cash that you're using and the financing to be able to continue the construction project.
Excellent. So it doesn't sound like it's over-leveraged or over-dependent upon, because a lot of the equity is put up front, and then you're slowly taking those amounts as you're building vertical. And so it's like the plane sustains itself. And then ideally, right, 90% occupancy or greater, then you can maybe do a cash out refi and fix the debt for a period of time. That's probably lower interest rate, hopefully, at the point when those things are hitting. Is that a fair summary on that?
That's exactly right. We can and we always do look to recapitalize and refinance ourselves into more permanent debt once the property is stabilized. Mm-hmm. And then with the Building Communities Fund, it's beautiful because we have a lot of optionality. Mm-hmm. We can choose to retain that asset within the fund. We can sell that asset out in the market to a third party. We can sell it to the housing fund as well. So we have a lot of different options for the exit strategy for that asset.
I think that's so smart. Multiple exit strategies, right? Which gives the optionality, and it gives it diversifies the risk because there's multiple exit strategies. Which leads into the next thought, which is, capital gains tax, right? A lot of investors might show up to DLP Capital or want to, but they've got a huge gain on cryptocurrency or a primary home or a business sale, or they're in a 1031 exchange and they're running out of time. So talk about the frustration as it pertains to capital gains tax and people wanting to get into the funds, wanting to diversify highly appreciated assets, but sometimes they kind of hit a brick wall.
Yeah, no, you hit it right on the head. Usually when you have, and what we face most of the times, are other real estate operators. Folks who own real estate, have been real estate operators for many years, and now are faced with, okay, I have another 1031 I need to do. Well, we cannot 1031 exchange into our funds. So if the investor chooses, right, they could pay the tax, but that's usually not the first thing they want to do in any case. So what they're looking for is another solution, which thankfully, you've been able to provide some of our investors that solution. But again, it's not just real estate. To your point, there are other asset classes where investors have capital gains and have accumulated those capital gains, would love to invest in our funds, right, from a perspective of getting those consistent returns, finding a new place to park capital and get, again, an amazing return consistently. we can't do a 1031 in, so that's where folks like yourself come in and capital gains tax solution.
Appreciate that. Yeah, and I want to dive into that a little bit further about the impact now on a shift. And by the way, if people want to learn more about that, then go to capitalgainstaxsolution.com, how to eliminate the 1031 exchange. You can sell, defer your tax, and go right into DLP Capital's funds without using a 1031 exchange on any asset of any kind. We're here to help walk you through that process. But I want to talk about impact, right? So impact is a big part of what, for me, and I know for a lot of our clients, and why we've chosen to invest. Personally, I've invested with DLP Capital, my family, and a lot of my clients. For the impact you guys are making, it's beyond just numbers, right? It's both. And talking about ending and helping to, end the housing crisis, right? And it's a big goal and it's a big aspiration. But, here's what I'm seeing, Rich. I'm curious what you think about it. And this is known as the largest wealth transfer in the history of the planet. It's happening. And according to Marcus and Millichap, John Chang, head of research, about $84 trillion is set to pass in the next 20 years. This is known as the largest wealth transfer in the history of the planet. And this is tied mostly commercial real estate, high-end primary homes, and businesses, of which 50% of that wealth across America are those three assets as well. These are illiquid assets that a lot of people want to make an impact, want to make a difference, but feel trapped by the capital gains tax, trapped by the estate tax. But just talk about even just a percent or 10% of that $84 trillion being able to be unlocked and invested into Buildings Community Fund, the housing fund, right? The lending fund, and the difference in the impact that could make for DLP, for investors, and for the housing crisis.
Certainly. And there's two different components of that. I mean, I'd love to come back and talk a little about impact in a different way, the impact we're making in communities, and again, over the housing crisis. But if you think about just the impact we're making from an investment standpoint, right? The beauty of our funds is they're all evergreen, which means an investor can come into our funds and they can be in that fund for 10, 20 years, right? As long as they want to, which is very difficult to do in other funds and especially of alternative assets. So that's a great aspect of the way we structure this, because again, take your 10% that you mentioned. It's easy to double that 10% in 5 to 6 years, right? Which means you can quadruple it in 10 to 12 years, right? And now you're talking great generation of wealth. And again, how do you preserve it? We always say consult your accountants, your advisors, your attorneys, right? In terms of how to structure things. But that's amazing wealth that you could generate within our funds.
Yeah, so what we're talking about here, the concept of tax flow and cash flow and generational wealth impact, and having all of these three converge. And, I also believe that this is like the time as this, like we're created for a time like this. And my thought is it's the reverse Tea Party, Rich, right? If you remember, before we were a nation, those that were fighting against the British rule were saying, look, this is too much tax for not a lot of representation. Now we've gone on and our nation is, 200 plus years old, and we've amassed what might be the biggest and the largest amount of wealth in the history of the planet. And so the impact that it can have, or we fumble. And the fumble can be, no matter what side you vote for, the government not being very efficient with solving the multifamily housing crisis or housing crisis in general, and or just not being very efficient with the tax dollars, right? So to keep it in the hands of the people and to be able to invest and make an impact for communities, I think is tremendous, right? Which leads into talking about the, how many housing units we're short and what the vision is to keep, to have for DLP to make a difference in that.
Yeah, so I appreciate that, and I'll tell you, I'm from a personal perspective, right? I believe in our mission, our purpose, right, in making that impact and really solving that workforce affordable housing crisis. Today we're short over 5 million units, right? When you think about it, and we've actually crossed that threshold of affordability. Over 50%, we're now at where the average rent is 30% of the median income. So again, that means for many folks, they're just priced out. They have no place that they can go to. And that means they have to give up, not just luxuries, but just basic benefits, right? Things like food, shelter, car. So again, for us, it's being able to create and improve properties where we're creating a community where folks can have a great place to live, but at an affordable price.
100%. Rich, you ready for the lightning round?
I'm ready.
All right. Knowing what you know now, if you could go back to your, let's call it your 20-year-old self, perhaps you're still in New York at that point, what's the one golden nugget and make sure to tell yourself to do?
Invest in real estate. Invest fast early on and keep investing.
Question number 2. What's the number one book you've recommended or gifted the most in the past year?
The one I've gifted the most is the Building an Elite Organization, just from a standpoint that, again, I believe in it, our methods, and I think it's helped a ton of entrepreneurs. The other is Chase the Line, probably one of my single favorite books in terms of if your goals don't scare you, then they're not big enough. You got to set God-sized goals that you think you can't handle and chase that dragon.
Amazing. Next question. What are you most curious about right now?
Who's going to be our next president? Probably. But other than that, when is the weather going to break here in Florida? Well, it's pretty warm out there, but yeah.
Excellent. Second to last question. What's your number one leadership quote or theme that you strive to live by?
I would say there's 2, and they are part of our core values: stewardship and servant leadership. So I love the fact that we added the word servant before leadership a couple of years ago. And I think they intertwine perfectly, which us as, managers of capital and folks, their wealth and a lot of times their life savings, right? The first thing we look at is being good stewards of that capital and of all of the treasures they put in our hands.
Amazing. I'm going to do one more bonus question because I'm just kind of curious now. We're filming this in August, right? Between now and the end of the year, what's the one big domino, one big rock if you or DLP could knock over by the end of the year would make the biggest impact for investors?
Oh, that's a good one. I would say if we could find cheaper cost of capital, and there are pockets out there, we're working on that in different structures, that helps just increase returns plus lowers risk.
Great answer. Last question, Rich. After all your success, helping all the people you've helped, after all of these years, what would you say is the number one practice or habit that you practice to help you stay centered in your values and charged up to reach even higher heights?
Oh, for me, it's very simple. I have a very structured morning routine where it starts off with prayer, meditation, journaling, and a little bit of exercise, and that sustains me, and that's how I keep going.
Amazing. Rich Delgado, I want to thank you for being on the show. I want to thank you for sharing so much wisdom with us. A ton of content here in just a few minutes. I want to encourage you to keep using the gifts you've been given, which is connecting well with great people, and also understanding numbers to an intricate part where that it can make an impact for people's lives. So for people who want to get in touch with you, would you remind them one last time what's the best place for them to find you and DLP Capital?
Yeah. I would say go to our website, dlpcapital.com. All of our information is out there. You can reach me at richdelgado@dlpcapital.com. Again, I think if you wanted to reach any of our members, all of our information is on the website.
Amazing. Thanks, Rich. Also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust and investing with amazing companies like DLP Capital is some of the best way, if not the best ways for you to create and preserve more wealth and make an impact. If we could be of any service to you, please go to capitalgainstaxsolutions.com. Please rate, review, subscribe. Please share this with someone who can be inspiration and impact to. We appreciate everyone out there, and we